Daily chart, we formed a bull inside bar, closing on its high. But one of the biggest problems that I think the bulls have overall is last Friday's bear breakout. Last Friday, it's a strong enough bar that it's likely to influence the next several days. And because of that, I think the odds are we're going to get some kind of credible second leg. Similar to this right here. It's a little bit different, but we had a strong bear breakout after a fairly strong rally, big bear bars. And even here, this was likely to influence the market for several bars. The market went above the new high, but you can see what's happening. We're drifting back down. Not quite the same context, but whenever you get a strong breakout, let me go back to this chart here. Whenever you get something strong closing below the moving average after the market's been fairly bullish for a while, usually it leads to a trading range. And if the market's going to evolve into a trading range, that makes me think the odds are we're probably going to find sellers and get a second leg down. So we may rally for a couple of legs, but right now, this bear bar has enough influence that even if we go above its high, I think there's still probably sellers above it. The way I think about it is this. The odds are, even if we go above, there's probably sellers somewhere between 6,800 and 7,000. Weekly chart. We had a surprise. The market went outside down last week, and now we have a fairly weak high one buy. It's an inside bar, and it's really not a great buy signal bar above. And because of that, that increases the odds there's sellers above the bar, and we'll get a second leg down. The sellers, even if we get above last week's high, as I mentioned, there's still probably sellers above it. Five-minute chart. First bar of the day, we formed a bull bar inside of an overall trading range. Trading range, you can think about as a triangle. The market, the range is contracting. Most traders better off waiting for 6 to 12 bars. If you buy above it, what do you do? If you see bar 2, some traders will get out, but realistically, there's probably buyers below the one low. For the bears, they have follow through on 3. They're hopeful that it's a breakout below the triangle. However, 2 legs down, sell off to the 1 low, pull back 2 high, second leg down, 3 low, probably buyers below 2 and a bounce. Strong enough consecutive bear bars, 2 and 3, that the odds are there's probably sellers above. And then we got a surprise on 4, follow through on 5. Consecutive bull bars breaking out of several bars to the left increases the odds that any of the bears who sold below 2, sold during 3 are trapped. And because of that, they'll probably look to exit on any bounce. Bulls, they can buy a pullback, consecutive bull bars 4 and 5. Probably going to get a second leg up, even if we test back to the 3 high, the breakout point above 3. 6, bear bar closing on its low. A little bit of an expanding triangle open. 3 pushes up. 69, 78, and 6, but with consecutive bull bars 4 and 5, probably buyers somewhere below 6. What do you do with bar 6? It's probably okay to exit longs, but realistically, whatever sell-off we get below 6 is probably going to be limited. And then 7, doji, bull bar, really not what you want to see. Not a good entry bar for the bears, selling below 6. To me, 4 and 5 are more credible than bar 6. And that makes me think probably buyers below. And we'll probably get some sort of second leg and second leg up after bar 4 and 5. 8, we tried to form a second entry, but an inside bar, but a small bar, not a great sell below 8. Pull back after bar 6, probably buyers below. You can see some traders, they ended up selling below 6, disappointed 7, and they tried to get out break even at their original entry back at the 8 low. 9, strong enough reversal bar. strong enough surprise that I expect we're probably going to go at least a little bit higher. And then 10, we have a bear bar closing on its low. One of the problems with 9 is it's 3 legs up, 2, 6, and 9. Plus 9, it's a fairly large bar. And with it being a large bar, I say it's large, it's a fairly big bar, but it's not significantly bigger than the bars to the left. So breakout bar, yes, but it'd be better for the bulls had the bar been more of a surprise. Bear bar closing on its low, 10, with the previous bear bar, 6. Bears selling below 6, scaling in higher, probably going to make money, and therefore probably a good idea for bulls to get out below the 10 low. High one buy 11, but not a great buy above. Bulls that bought below 9, bulls that bought the close of 9, disappointed with 10, probably will use a bounce on 11 to get out. And you can see 12 looks like there's more sellers above the 11 high than buyers. Breakout pullback sell on bar 12. It's the same situation as bar 8. We had a bear reversal bar 6, bad high one buy 7, and now we have a second entry sell bar 8. 1 second. So is this the same logic with is bar 12 a second entry the same thing as bar 8? Well, it is, but now we have a second leg up in an overall trading range environment. It was reasonable to expect a second leg after 4 and 5, and because of that, traders will see the rally and a pullback, and they'll expect some kind of second leg, and they pretty much have it with 9 and 10. Because of the previous selling pressure, there's increased risk that we may get a sell vacuum test of the 9 low and the 6 low. And that's what happened with bar 13. 13, enough of a surprise. We may go lower and may test down to the 7 low. Consecutive bear bars, 13 and 14, probably sell the close and at least a second leg. But consecutive bear bars, we may get a pullback first. 15, pullback after 13 and 14. You can see some traders, they sold the close, they sold more at the midpoint, some getting out break even, and that's why we bounced on 16. But now with 16, we rallied, sold off, rallied again, and pulled back, so it's an implied second entry, and we still may get a more credible second leg down after 13 and 14. Bear bar 17, closing near its low inside bar, not great for the bears, but context makes sense. And because of that, this tight trading range here, you can basically call it a triangle, or it's a trading range on a smaller time frame that's contracting, so it's basically a triangle. That increases the risk we get a second leg, and that's what happened with 18. 18, bear breakout, closing on its low, but now we have 3 pushes down, 11, 14, and 18. That increases the risk that we get some kind of pullback. We had consecutive bear bars, 13 and 14, and we pulled back for 3 bars. Now we have a bear breakout, 18. That increases the risk that we're going to get a bounce. 19, bull bar, closing on its high. Good for the bulls, but the channel down is fairly tight. In 19, it's an outside bar, and that's a trading range type of bar, so it actually lowers the probability of 19 leading to a strong upside breakout. 20, bear bar, closing on its low. Possible in a test of the third leg up to a test up to the 16 high, which is the top of the third leg. We sold off, pulled back on bar 12, sold off, and then we pulled back to 16, top of the third leg, and then we got a third leg down. And that increased the odds that there'd be sellers in the upper third. 20, bear bar, closing on its low, and then strong follow through 21. Probably enough of a surprise and a possible breakout below the wedge that there's probably sellers on the first reversal up. And you can see what happened with 21. 21 rallied and then pulled back. Not great. The first reversal up failed for the bears and will probably go at least a little bit lower, but you have to think about the logic. If 21 was such a strong reversal down and it's undoing, the reason I'm calling it 21 is 20 and 21 is a reversal. It's reversing this price action here. And 21 is not significantly bigger than the bars to the left. If it was significantly bigger, you can think about it more as a breakout. But the point is, 21 is not enough to undo It's strong and it's likely to get a second leg, but the follow through of 22 is disappointing, and that increases the odds. Bear sold, who sold 21, scaling in higher, will probably be quick to get out. 23, bear bar, second leg down for after 21, but not strong, and that increases the odds that we may just go sideways here. And that's what we did. We reversed up 24, tried to sell off again on 25, and then we got the second entry, 26. For the bears, more clear wedge bottom, 1, 2, 3. Always in bears, I'd get out above the 26 high. Too much risk that we test somewhere back up here. Follow through 27 consecutive bull bars, probably buy the close, and at least a second leg. 28, more follow through. Now we have a micro gap, 26 high, 28 low. Still buy the close and buy the pullback. 28, 29, a doji, but not enough of a reason for traders to exit. Even if we get pullbacks, even if we pull back, there's probably support back at the breakout points. 27 high and back at, you can call them breakout points, you can call them micro gaps. We have a micro gap, 27 high, 29 low. Here, probably support. We have a micro gap, 26 high, 28 low, probably support here. So there's probably traders willing to buy these gaps, betting on a bounce. Bears, they're hopeful for a lower high, but that's enough buying pressure that I think it's really dangerous for traders to be selling. $30, another bull bar closing below the midpoint, and therefore not a strong bar, but I suspect it's basically a pullback. We have a breakout, we have a reversal, 26, 27, 28. You can think about it as a breakout, and now we're getting hesitation. That's a pause, and that's contraction. Markets, you think about there's something called, I think about it as first principles of market behavior. And what that means is, first principle is just something that you believe to be fundamentally true. And one thing that, if you just look at it, makes sense for a market. Markets expand and they contract. You have volatility expansion, which is a breakout, and then volatility contraction. Contraction is agreement that we're at a fair price. Expansion is market probing to find that next price level. So we're contracting here, 29 and 30. And because of that, the odds are we're going to get some kind of second leg. 31, bull bar, good for the bulls, probably going at least a little bit higher. 32, follow through. Consecutive bull bars, 31, 32, near resistance. The close of bar 9, probably going to get a pullback. However, even if we do pull back here, the odds are there's buyers below. We have lots of breakout points, and therefore you may have traders looking to buy a test of the previous breakout point, such as the 30 high. Bear bar 33, but not enough to undo the bars to the left. And then outside down 34. But because it's an outside bar, it actually lowers the probability for the bears. And then a bull bar 35, looks like we're going to go sideways and get a second leg up. 36, 37, we tried to get follow through buying on 36, and then we broke to the upside and reversed down 37. 37, a second entry, and a decent bear bar closing on its low in relation to the past several bars. And because of that, because the bar is relatively big compared to the past 8 bars, it's not small. That actually increases the chances that this might go a little bit lower. Here's a reversal, 24. But it's not all that big relative to the past 6 to 8 bars. It's actually kind of small, and that lowers the probability for the bulls, especially after this bear breakout here. And that's why it had at least a small second leg. We had a decent rally, we broke the trend line, and then we tried to go again higher, and now we're getting a second entry sell. And I think that's reasonable for always in bears, always in bulls to get out below 37. 38, consecutive bear bars, 37, 38. Looks like we're going to get at least a small second leg. 38 is not a strong reversal. It's not a strong entry bar. 13, that's a strong entry bar. 38 is not all that strong, and that increases the odds that we may go sideways to down rather than straight down. 39, we tried to get a second leg down, and I made the comment down here that there's probably more traders buying below than selling. 40, outside up, good for the bulls, but an outside bar, it's a little bit problematic for the bulls. It's not outside bars or trading range bars, and that increases the risk that we may end up going more sideways rather than going straight up. But it's a strong enough bar that the odds are there's probably buyers on a pullback. And then we had an outside up bar, and we almost had an outside down bar. Outside down 41 increases the odds we're going to get a second leg down. But even if we do get the second leg, one of the problems is this rally is strong enough that it's likely to get a second leg. And this decent bull bar, 40, is probably going to get a second leg up. And unless the bears are able to get a strong downside breakout, if the bulls start to stabilize, we'll probably find buyers and rally. Bull bar 42, but after bar 41, probably likely to get at least a second leg down. So probably sellers above 42. And then we kept getting dojis 43, 44, 45. This is a warning that we're probably not going much lower. Bear bar 46, good for the bears, but a possible parabolic wedge. Sell off to the 42 low, rally. Sell off on 43 and 44, rally. And then bear breakout 46. You can call it a bear breakout below a bear channel on a 1 minute chart. And then we got the reversal up 47. So it looks like we're going to start to stabilize. 48, low one short, probably buyers below. And then 49, bull bar closing on its high, increases the odds that we go sideways. And probably going to try and test up here. Reversal 50, 2 legs up, 49 and 50. Decent reversal bar. We may test a little bit lower. And then we tried to get decent follow through, 51 consecutive bear bars. What about selling the close? You're selling the bottom third of a trading range. And because of that, there might be more traders buying right here. But enough of a surprise, we may have to get at least a small second leg down. $51. We already talked about that. Consecutive bear bars, we may get a small second leg down, but it's a possible trap. And then when you see 52 closing on its high, and obviously 53, lots of traders giving up, strong enough breakout, probably buy the close, buy the pullback, and we'll probably get some kind of second leg. 54, 3 consecutive bull bars, not a great close, not a great bull bar, not a great consecutive, 1 second. Consecutive bull bars, 52, 53, not a great reversal, 54. 54 is a bull bar, and therefore probably buyers below, buyers in the bottom third of the bar, and a second leg. And we got the second leg up, 55, 56. But now a micro channel, probably the first reversal down is going to be minor, and we'll probably find buyers. 57, doji. And then we got another leg up, 58 and 59. But now we're forming a parabolic wedge. Breakout 53, pause 54, second leg up 56, pause 57, third leg up 58, 59. Probably going to pull back and go mostly sideways. But even though it's a parabolic wedge, 1, 2, 3, it's a breakout on a higher time frame. And that increases the odds that we're going to go, that we'll get at least, that whatever reversal down we get is probably going to be minor unless the bears can get a strong reversal. 60, weak high one buy, probably sellers above. And then you can see we triggered the high one buy above 61. And we formed a bear bar, not a great bear bar, 62. Body relatively small. And it's not that much bigger than the bars to the left, so that reduces the probability for the bears getting a successful reversal. 64, 63, follow through for the bears, strong enough that we'll probably get at least a small second leg down. But you can see 64 undoing most of the follow through bar after 63. And because of that, bears who are selling and scaling in, they'll probably be quick to get out. And then we started to go sideways, 65, 66. That's enough of a reason for bears hoping for the reversal to exit. We're now entering breakout mode, and it's basically 50-50 probability that we break to the upside, 50-50 reverse down. And because of the rally from the 52 low, the odds probably slightly favor the bulls. 67, 68, follow through buying. Looks like we may go a little bit higher. And then we got the bull breakout 69, good for the bulls. But now we have a wedge with 36, 59, and then 69. Strong enough 3 consecutive bear bars that the bears would probably need a decent reversal closing on its low to undo the past 3 consecutive bear bars. Not a great bear bar 70, probably buyers below and at least a small second leg up after 69. And they got that on 71. But now 71, we have a second leg up after 69 here. And because of that, there's less probability that this breakout is going to go much higher. So we may end up pulling back to the moving average, which I think is more likely at this point. 72, decent bear bar, probably going at least a little bit lower. 73 consecutive bear bars, 72, 73. Not a great close, 73, but enough of a reversal down, 72 and 73, that there's probably sellers above the 73 high and the 72 breakout point. And then you can see 74, bull bar, but not a great buy. You can call it a high one buy if you want, or a high two. We had an inside bar here, went to a new high, sold off, and then we have a bull bar. And it's technically, in technical terminology, it's a high one because we created a new high on 71 and then sold off. But really not a great buy above 73 or 74. Probably sellers above. Plus 74 is an inside bar. 75, we failed to trigger the buy. It looks like we're going to get a second leg down. 76, a second entry after 74, but a micro channel from 71. Not a great buy signal bar. Probably going to try and break below 73. And we did on 77. But we're getting a lot of dojis. Makes me think this is more of a bear leg in a trading range, and we may bounce. And you can see it's basically what we did into the close. For stop orders, you can buy above 1, betting on a trading range open. Not ideal. If you do, you probably get out below 2. Other traders, might get out below 1, but you're in a trading range, and the odds are there's buyers below 1. Bears, they sell below 3, they probably get out as the market reverses up on 4. Bulls, they can buy above 4. What about buying above 7 or 8? I think that's pretty tough to do. And you can see not great buy signal bars, big bull bars with tails. Makes it fairly difficult for traders to buy on the stops. The first credible, and reasonable sell was selling below 10. 3 legs up, 1, 2, 3, or 1, 2, 3. We have a bull channel, and we have a decent bull bar and a strong reversal down with previous selling pressure. Bar 2, bar 6, and then bar 10. Probably an okay sell, and probably sellers above the high 1. Bears, if they're short, where do they get out? Some might get out above 19. I don't think they have to. It's an outside bar. Probably going to go more sideways. And then I would definitely get out above 24, certainly above 26. Bulls, they can buy 26. And where do they get out? Some might get out below 33. I don't think they have to. I would definitely get out below 37. And then the bears, they probably get out. This is where it gets tricky. It's hard to stay short above a bar such as this bar here, bar 40. And if you buy it, obviously you get stopped out on 41, and that's just a warning. Outside bars in a tight trading range, really not ideal. Bears, they can probably sell 41 with the understanding that it's probably a bear leg in a trading range. When they start to get a series of bear bars, they probably just they exit for a small profit or break even, probably above the 47 high. And then bulls, maybe they buy above 49, but you're buying, it's a little bit tough. You buy that. What do you do there? You probably get out because it's 2 legs, rally, pull back, second leg. And then 50 bears, if they sell, I said bears, I meant bulls buy above 49, but they probably get out below 50. Bears, if they sell, what do? They probably get out above 52. 52, decent bull bar and a possible higher low. We have a left shoulder head, right shoulder, so it's a higher low, major trend reversal on a smaller time frame. Decent bull bar 52, strong follow through 53, always in long. And then bears, where do they get out? Where do the bulls get out? They probably get out below 62. But then where do they buy again? It's tough. Some might buy above 67 or 68, but that's buying in a tight trading range. Really not ideal. And if you do buy here, you definitely get out below 72. And if you're aggressive, maybe you sell the 72 close or 72 low, and then you probably just get out somewhere in here, certainly above 78 or 79. Limit orders. I thought buyers below 1 and probably sellers above the 2 high, but tough to sell when you see consecutive bull bars. I thought buyers below 6 or buyers below 5, certainly buyers below the 8 low. I thought sellers above 11, probably sellers above 14, sellers in the midpoint of bar 11, anywhere in here. And then I thought buyers below the certainly below 23. I think it's tough to buy below 22 because you don't know how strong the second leg down will be. But when you see 23, it's a fairly weak second leg down, probably buyers below 25, and probably sellers. When you see 37, sellers in the upper third of the range, and then when you see 38, reversal and follow through, probably sellers in the upper third of the range. But tough to sell when you see a bar like 40, and then 41 strong enough bar, probably sellers above. But as you start to get a leg down and another leg down, and then you see 46 and a reversal at 47, probably buyers below the 48 low, and even buyers below bar 49, the bull bar closing on its high. So buyers below 49 during 51. Probably buyers below 56 for a bounce. And then up here, I thought sellers above 61, and then probably sellers above 70 for at least a pullback. Buy the close, sell the close. Maybe buy the close 5, but better to buy a pullback. And then I thought probably sell the close. Certainly 14, better to sell the pullback. And I thought the easiest buy the close, sell the close of the day was the buys. Buying 27, buying 28, buying 29 after a strong reversal. We have a double bottom, and the second leg is a wedge. That made sense. Buying 53 and 54, that probably made sense as well. Everything else, is more of a quick sell the close 21, sell the pullback for a scalp, more or less quick trades. Let me take a look at questions. Okay, question, do you consider bar 57 a buy signal bar? Is it reasonable to hold long after bar 56 close, or is it better to take profits first and after the close of the bar 57 and then buy again? Well, 57 is a weak. Think about it. 57, we had a breakout 53 and then a pause 54. So that pause is a pullback. Pullbacks are either reversals, the reversal attempts, and therefore the reversal attempt is either going to be successful and reverse the market, or it's going to fail and lead to trend resumption. So 54, it's a reversal attempt, but it's not strong enough, and therefore the market resumed. 57, it's a reversal attempt, but it's not strong, and therefore the market resumed. So when traders see 57, I think a lot of traders look at that bar and they buy it, betting that the market is going to go higher. Let me take a look at more questions. Okay, question, I placed a stop entry above bar 10. Try to make the box bigger. Okay, I placed a stop entry above bar 10 and got trapped. I'm not sure. I think you mean you placed a stop entry buy above bar 9 and you got trapped, and then another stop entry short at bar 21. Let me just see what this person's asking. Okay, I'm not quite sure. You said you took a stop entry below 10 and you got trapped, and then you took another stop entry on 21 and you got trapped. I'm not sure if you mean, you got out during bar 11, but I thought 10 was strong enough to expect at least a second leg down and test of the 9 low and the 6 low. So if I'm selling below 10, I'm certainly not going to exit above a weak high 1 such as bar 11. And then selling down here 21, it's a strong enough breakout bar but it's late in a channel. And I thought 21 was strong enough to get a second leg, but because it's late in a channel, there's an increased risk that the second leg is small and then it ultimately fails, which it did. So I don't know if that's really answering your question, but overall, if you can't sell below 10 and just stay short forever, and then you see the reversal. This is a leg in a trading range, and you got to be willing to take profits. What are your most common setups that you use for entries? For me, I really like breakouts. I'm always watching for breakouts and reversals. They're basically the same thing, but I think about a breakout. Breakout is just an easy way to think of a breakout is you have to have a close above the high of the previous bar, and you want a follow through bar, and therefore you basically need the breakout has to close above the high of the previous bar, and the low of the bar needs to be above the high of the previous bar. So bar 7, bar 5 is breaking out above bar 4. The low of the bar is above the previous bar high, previous bar low, and the high of the bar is above the previous bar. And I'm also looking for reversals. To me, a reversal is a change in direction. We have a bull breakout 9, and then we have a strong reversal bar closing on its low. That's a change in direction. What I'm always paying attention to is reversals that get follow through, because reversals that get follow through, especially immediate follow through, it usually gets some kind of second leg. We didn't have a ton today, but 37, 38 reversal follow through usually gets second leg. You can also think of the follow through as this. We have a reversal bar, pause, and then follow through. That usually gets a second leg. But my favorite thing to look for is breakouts and second legs. So, certainly something like this. You can call this a bull breakout, 27 and 28. You can call 26 and 27 a reversal. We have a sell-off, and then the previous bar, 25, is a bear bar, and then this bar is a bull bar. Therefore, it's reversing the price action. This is a fairly strong bar relative to the past 6, 7, 8 bars, closing on its high, and it gets immediate follow-through. That's one of my absolute favorite trades. Just buy the close, use a wide stop, and just add on as the market goes higher. You can buy the close 27. You can buy the pullback. And you can buy the breakout point. And the odds are really good that you're going to get some kind of second leg. Even here, strong enough reversal 21, you're still probably going to get at least a second leg down. 11, 13, and 14, strong enough reversal. You can call it a reversal. You can call it a breakout. Technically, I would think of 13 and 14 as a breakout, because 13 is not changing the bar direction in terms of the previous bar. Bar 12 is a bear bar closing below its midpoint. And therefore, the midpoint, I think about, I see the midpoint as bar direction. So if we close below the midpoint, it's a bear bar. If we close above the midpoint, it's technically a bull bar. I know that might sound confusing for some, but you have to have a definition to define a reversal. So to me, 13 is technically a breakout. It's a bear breakout, not a bear reversal. And then it got follow through, and that's strong enough that we're going to get a second leg down. Same thing over here. We have a bull reversal bar because 51 was a bear bar. So we're getting a bull reversal bar, and it's getting a strong follow through bar. Just buy the close, or when you see 54, buy the close of 54, betting on a second leg. That's what I really like to look for. And the reason I like that is because it's relatively high probability. Okay, for a swing after 2 consecutive breakout bars, example 27. So for a swing trade, for example, 26.27, I always thought there's lots of resistance above, so not likely to go for 2R. How do you overcome this? Yeah, well, I'm never, my goal, very rare. It's very rare that I'm going to be holding for 2R. When I look at a trade 26.27, here's kind of the way I think about it. My general thought process is this. If you want to really simplify it, you can think about it like this. Okay, here's the range. This is the basic range of 26 and 27. So if I buy the close of 27 and I put a stop below 26, you can probably hold for 1 hour and you'll make a profit. I think a lot more about actual risk. And for me, I'm not going to get out below 26. If I buy the close, if anything, I'm going to buy more below 26. I need something strong to push me out of the trade. But anyways, if I'm buying 26, a lot of times I'm going to trade small enough to where I can add on. I'll buy more 20 on 28. If I buy the close of 27, I'll buy more 28, buy more, 29 or 30. And, obviously I don't want to have too large a position. And then when I start to see strong bull bars, 31, 32, after consecutive buy climaxes here and then here, I'll probably start to reduce the position. And then I'll start to look to buy a pullback. But once I start to see the market going sideways, then I'm going to be fairly quick to get out. Let me see if I can just find the day. So here's the example. This is much different. Strong breakout bar, follow through bar, and then we get more follow through bars. That's really what you want to see. When I see something like this, I'm going to be much more willing to hold the trade. But you can see, look to the left. There's nothing to the left. Over here, strong bull bars, but look to the left. There's a lot of stuff to the left. That's generally the way I think about it. Yeah, someone said bar 40 was an outside bar, and then it triggered the buy, and then immediately started to sell off. And is there any way to better predict that 41 was going to go a little bit lower? Yeah, 41, the reversal was fairly strong, and it was pretty fast. And because of that, the odds were the market was probably going to have to go sideways. And my overall thought with 40 and 41, I thought 41 was enough of a surprise. It'd probably go a little bit lower. But I thought that the downside was ultimately limited. And because of that, my thought process was 41's a good bar, but realistically, unless 42 is a strong bar as well, the odds are, something like this, the odds are against the market going a lot lower. And when I saw the dojis and overlap, I thought, sure, we'll probably go a little bit lower, but probably not that much lower. So ultimately, I thought it was a leg in a trading range. So where do we go next week? I think that overall, there's probably sellers above the high of this week. We have it's basically an inside bar compared to last week. Let's go to the weekly chart. It's easier to show it. We have an inside bar, and the reality is there's probably sellers above the bar and sellers in the upper third of this week. So we may try and trigger the buy above the high one, but if we do, I suspect probably sellers above and a second leg down. But we'll see. All right. Thanks everyone for listening. And, a good homework assignment, I think would be, kind of giving weekend homework is kind of a fun thing to do. One thing to think about is how do you define breakouts? Now, I've talked a little bit about breakouts here, and, it's actually pretty easy. You want to, how would you code a breakout or think about a breakout? It's relatively simple. A breakout is a close above the high of the previous bar, and the low, it can't be an outside bar. So to have a breakout closing above, an easy example, for 13 to be a breakout, it's got to break below 12, and it's also got to form a lower high. So you have a breakout defined. And I would think about, how many breakouts get second legs? And the more you can categorize the likelihood of a breakout getting a second leg, the better off you're going to do. So I would spend a lot of time this weekend thinking and just asking yourself, how well do I understand breakouts and second legs? And if you do, I think it'll help you a lot. It's one of the things, just look at a chart. How well can you define what a breakout is? Can you define the second leg? Can you define the pullback? The more you do that, the better off you're going to be with your trading and the more accurate you can be with your trading. All right, I'll talk more about that next time I'm in the room. Hope everyone has a great weekend, and I'll talk to everybody soon.